Welcome back to the 2011 mortgage event in Bristol. I'm joined by David Whittaker. David, you did a wonderful presentation on buy-to-let for us today.
Thank you.
And you raised some interesting points, including one of how brokers need to be looking at multi-unit properties and how there's 63% of remortgage business available there. Can you explain that in more detail? Why should brokers be looking straight at this?
Well, these are the investors who have been pushed out into the open, mostly by the Irish banks and Royal Bank of Scotland, because as those banks seek to restructure their balance sheets, these are easy investors to say, take your debt away, and any debt you have with the bank isn't a mortgage, it's a loan, and the bank can ask you to pay it back. The banks are deploying various tactics to do it. Some are friendly, some are less so, but mortgage brokers will find a lot of their customers will have exposure to the banks, and they've been invited to take the debt away. So there's their opportunity. Speak to those customers, see what they can do for them.
Okay. And should they be speaking to them now, soon as?
Well, I wouldn't suggest they put it on the Christmas card and suggest it's going to happen, but certainly the pressure is already coming to bear on some of them, and the tempo will pick up in the early January and February time as RBS look at their timescales and say they need to get this money back. Okay. And I think they'll find that in their weekly newsletters, or perhaps as Matt Smith was saying earlier, go out on Twitter and say, if you're an RBS customer and you're feeling pressure, talk to us, because there are solutions out there for them, and those brokers do have the tools to provide the answers for their customers.
I have to ask about the private rented sector. Obviously, with the economy recovering at a snail's pace, how much bigger do you think the private rented sector could become, say, by 2015?
Gosh, are we going to head towards the German model of 20% PRS? I think certainly it will continue to grow, and I think we're going to see it going up to 13 or 14%. Okay. But I don't think the British public will ever fall out of love with property as that aspirational castle to live in. And when the homeowner mortgage market picks up and people can find deposits again, it will find an equilibrium. But the PRS is here to stay, and buy-to-let is now an important component of the mortgage sector.
Lastly, when first-time buyers do return to the market, will the buy-to-let bubble burst?
You'd hope I'd say that it won't, but certainly the yields are running north of 6% at the moment, and that's not sustainable in the long term. Buy-to-let should run at 5%, so there will be an adjustment. Not that rents will come down, but as property values pick up, rents won't grow at the same pace, so yields will ease back to 5.5% in the next 18 months.
Thank you for your time, David.
Thank you.